A very good afternoon to all of you. Hope all of you enjoyed a good lunch. The session after lunch is always going to be slightly difficult, but I'm sure with such a distinguished panel members on my left, I'm sure this will be a very rich and rewarding experience. So we have with us a very distinguished panel. Mr. M.V. Tangsale will be the moderator and the chairman for the panel, and he is the chief executive of the Indian Banks Association since he took charge of IBA on 1st December 2013. So during his course of his career, he has won several accolades and awards. To name a few, he won the Golden Peacock HR Excellence Award 2012 and Person of the Year for his contribution to financial inclusion by the Skoch Foundation. Mr. H.R. Dave has done his postgraduate diploma from the Indian Institute of Management, Ahmedabad, and presently he is the Deputy Managing Director of NABARD. Prior to assuming charge as the DMD of NABARD, he has held very senior positions and important positions in NABARD, among other things including the Director of the Bankers Institute for Rural Development and the Chief General Manager of the Corporate Development Department of NABARD Head Office. Mr. Pramod Kumar Panda is the Principal and the Chief General Manager of RBI, currently posted as the Principal of the College of Agricultural Banking, Reserve Bank of India, Pune. He was with the International Monetary Fund as the Resident Advisor, Financial Sector Supervision from 2012-2015. Dr. Shah Mohammad Hassan Habib is a Professor and Director Training of Bangladesh Institute of Bank Management. He did his PhD in International Finance from the Benares Hindu University. So this brief presentation by me for about say 5 to 6 minutes will set the floor for the distinguished panel members to discuss on the topic inclusive banking experiences. So the slide in front of you gives the important milestones which we have reached in the past. If you see from the slide, sir, I've just started from 1955. Excuse me. I don't know. Yeah. The nationalization of banks, lead bank scheme, establishment of the RRBs, the formation of the self-help groups, and the recently launched Prime Minister's Jan Dhan Yojana were all efforts that aimed at deepening financial inclusion efforts by all the agencies concerned. The present slide, sir, in front of you gives the outreach of the banks and other financial intermediaries, including other agencies. You can see from the slide, the outreach is very, very impressive. There are 182 million accounts which have been opened under the PMJDY. The outstanding amount under such accounts amounting to 237 billion. Yet, despite the impressive present outreach, financial exclusion still exists. The last slide gave the perspective from the Indian angle. This gives the global perspective. If you see this slide, sir, there is a large difference in various aspects regarding even from starting from opening the account, including to having a debit card, between the high income OECD countries and India and the rest of the world. This needs to be bridged as early as possible. Financial inclusion is on a critical mission mode. Still, there are barriers to financial inclusion both from the demand and the supply side. Both need to be addressed simultaneously. While from the demand side, financial literacy camps will be a very important tool. From the supply side, technology will play a crucial enabler for reaching the unbanked in a most cost-effective, scalable, effective manner. Coming to the financial literacy centers, sir, the slide is in front of you. There are, as on 31st March 2015, 1,181 financial literacy centers. The number of activities conducted are around 84,089. These financial literacy centers will play a crucial role insofar as financial inclusion from the demand side is concerned. Consumer protection is again an important aspect of financial literacy. these camps will have to take into consideration this aspect, and the banks themselves will have to gear up further to meet the consumer redressal mechanisms in a more effective manner. As I said, sir, the role of technology will be a real enabler as to how the banks achieve financial inclusion efforts. More of this will be dealt by the panel members. I would just suffice to say that technology will be a very important aspect insofar as financial inclusions are concerned. As CUIABF said in the morning that we had taken the views of banks and had included those points in our presentation. These are some of the points or steps which have already been taken by the banks in regard to financial inclusion efforts. If you see, some of the steps are really praiseworthy and indeed laudable. But then there are concerns as well in regard to increasing NPAs, inability to reduce deposit rates, stressed assets, etc. Sir, having walked all of you through the brief presentation, some of the points which are suggestive in nature, it is up to the distinguished panel members to decide how they go about it actually. Some of the discussion points which the panel members may like to deliberate are, why 100% financial inclusion has not been achieved so far? What should be the focus of financial inclusion? Should it be from the demand side, or it should be from the supply side, or a combination of both? How do you deepen financial inclusion? The viability of the BCBF model, the business correspondent model, what are the risks involved? What are the attendant risks involved in that? Is the BC model the most appropriate, or are there better models which India can perhaps try out? The new bank licenses, namely 20 banks have been recently allowed permission by the RBI. What role will they play in deepening financial inclusion efforts? And last but not the least, the role of technology in financial inclusion, including security issues, connectivity, communication, etc. Over to the distinguished panel, sir. Over to the chairman, Professor Tangsali, please.
Thank you, Muralidharan. Friends, at the outset, let me welcome the delegates coming from the various Asia Pacific countries and the institutions. On behalf of the Indian Banks Association, I welcome you all. Let me tell you that the IIBF is in existence from 1928, and IBA is a fallout of the IIBF. IBA came into picture in 1946. And that's kind of a relationship I think both the institutions have been managing together. And for me, it is a pleasure that it is for the second time I am in the APABI conference to have an interaction with the colleagues. Well, before I straight away get on to the subject, I would like to share that I have seen the evolution in the banking in last 4 decades. I've been a part of the banking industry for almost 40 years plus. And I've seen that in India, we have started with the nationalization of banks, the thrust on the rural banking, opening the branches in the rural areas. I think the couple of milestones which Muralidharan has shown, creation of NABARD, which was a part of a regulator, that is Reserve Bank of India. Thereafter, the policies on the banking correspondents, the business facilitators, so on and so forth. And today, I think we are a banking industry with almost 120,000 banks branches operating in the country. The regulator have just given the licenses for 11 payment banks and 10 small banks. But the challenges of the India are really different. We are a country with almost 660,000 villages, wherein the population of 500,000 villages is below 2,000. It means there is definitely a challenge of access, there is definitely a challenge of delivery, and the communication, which is the media today, that unless you have ICT, probably these challenges cannot be met with. Well, the Reserve Bank of India really embarked on a very structured way from 2006 onwards. And then we had the Financial Inclusion Plan 1, Financial Inclusion Plan 2, and I think today with the Pradhan Mantri Jan Dhan Yojana, which is a program which was driven by the Government of India through the banking industry, we claim to have reached each and every household of the country. The numbers which he has given, about 180 million accounts opened under this scheme. Let me tell you that if you really look at the numbers under the financial inclusion, cumulatively from 2006 onwards, they should be anywhere in the range of 400 to 500 million accounts. These many accounts have been opened in the banking industry. But then is the financial inclusion merely an excess of the banking industry or much beyond that? And thus, I draw your attention to the first question which Muralidharan has put, that why 100% financial inclusion has not been achieved so far. Let me tell you, I sit on the board of International Banking Federation, where all the banking associations from the developed and developing countries, including South Africa, Korea, they all join there at DIFID, and we discuss the level of financial inclusion. And let me tell you that even if the exclusion in India or the various Asian countries is much higher as compared to the developed countries, where the exclusion could be below 10%. But the focus on financial inclusion is the same, which is being really driven through the G20 tools. At the same time, on the financial literacy, the OECD, Mr. Mundra, who is our Deputy Governor of Reserve Bank of India, he is the President for the OECD chapter on financial literacy. And there is a great thrust. And thus the Asia Pacific countries, where the challenges of exclusion are much more, will have to address these issues slightly differently, given the challenges of volume, given the challenges of the geography, and so on and so forth. And thus, I think my first question I'll address to Mr. Dave, because I feel that NABARD is an institution which is actually a sort of a regulating institution for the cooperative sector and the regional rural banks. So they are really close to the grassroots. And thus, Mr. Dave, I would really like to know that the question is that we have not reached 100%, but how and when you feel that we will be able to really claim that the 100% inclusion, and what exactly you define as 100% inclusion?
Well, thank you very much, sir. It's a pleasure to be with you and the distinguished delegates. My thanks to IIBF for this opportunity. From NABARD side, the perspective that we have on financial inclusion runs into three parts. One, NABARD need to be a facilitator of the entire national agenda. And how do you facilitate this? That's the first part of it. The second part is, how do you see integration of the large microfinance movement in which country has invested substantially the financial resources and human resources in putting together a framework of almost 77.7 million self-help groups of women. Is it a possibility to converge the financial inclusion efforts on the microfinance sector? This is the second part of it. And third part is the gamut of financial literacy. We believe that when you look at demand side, financial literacy plays a major role. How do you address this? So in these three broad spectrum, the NABARD's perspective has been laid out. I'll touch upon one or two, and you kindly stop me depending on the time that you have. See, the first and foremost thing is the facilitation role. The way the financial inclusion landscape has evolved in India, especially after the new government has taken place, I think the focus on demand and supply side has been equalized. Initially, I thought we were primarily focusing on the supply part of it, enabling banks, directing banks, supporting banks to reach out to the people who had not reached out. But in a very smart move, what the government did was to make people look at what is being offered by the banks more seriously by piggy riding the no frill account with certain other incentives. We have a situation now where earlier branches were going to the villages, now we have crowds in the branches. So there is a subtle shift, but a major strategic shift in terms of how we reach out to the people. The supply side part, what NABARD has so far done is, we have 350 odd rural cooperative banks and almost 100,000 primary agriculture credit societies. Unless we bring these institutions into financial inclusion landscape, the efforts of the entire industry will be incomplete. Number one, we put all these banks on core banking solution, and now these banks are moving towards provision of RuPay cards, the RTGS, NEFT, the mobile banking, the internet banking, and we believe that another 2 years' time, most of these cooperative banks, which are strong enough to get approvals from the Reserve Bank, will be in a position to offer the add-on services post CBS. We also enable the regional rural banks in putting the system, especially the weak rural banks, to take care of the CBS expenses. And third part of it I would touch upon is, we have now launched a massive exercise of digitizing the self-help group movement. You know the issues in SHG Bank Linkage Program today. By far the largest microfinance program in the world. Half of India's rural population is linked to the banking system through the self-help groups. Half of India's rural population. Now, unless they are Aadhaar enabled, unless they are put on the digital platform, unless they are linked to the credit bureaus, the issues of repayments, issues of poor quality of books of maintenance of books of accounts, the multiple finance, which is also one of the reasons for the growing NPA. Now NPA in the SHG Bank Linkage Program is somewhere between 7.5 and 8%, which is something which is now leading to real issues, the rethinking on the parts of the banks. Last fortnight we had a meeting of priority sector chiefs of all commercial banks, including private and foreign sector, and this issue was posed to them, that would you like to integrate financial inclusion with the microfinance movement? Would you like to see the investments made by the country into bringing so many people on a self-managed, doorstep financial inclusion system? The difference was there is no technology. SHG Bank Linkage Program and the technology remained apart. We are now putting them back on the technological platform. Every member of the SHG will be Aadhaar enabled. They'll have a saving account. The DBT mechanism for women-oriented transfer of benefits will be routed through this. These self-help groups, the books of accounts will be maintained through the digital platform. They'll get returns. And importantly, the branch manager, which are now anywhere between 100 to 500 SHGs in a branch, he doesn't have the time to go to those villages. He'll get a MIS which tells him what is happening at the 100 SHG level.
I think we'll take the technology forward. Mr. Panda, who represents a premier capacity building institution of the banking industry. Pandaji, I mean, while you give the perspective of the capacity building requirement and what is that you are driving, it's the biggest challenge that how do we create a capacity building for the business correspondent agents and the business facilitators who are actually an extended arm of the banking industry. And to make that whole program viable, probably they will have to be put on some kind of measuring scale on their efficiency, productivity and so forth. So one is you give the perspective of the CAB, and the second is on the capacity building.
Thank you. Let me thank IIBF for asking us to represent here. It's indeed a very good opportunity, and it's a good platform where we can talk about things and brainstorm also sometime. Let me quickly talk about in a few sentences what RBI has done broadly, and then I come to the CAB Pune part of it, or in general about the capacity development initiatives. I would be alluding to the first presentation which was made, where the comments were made about the demand side and the supply side issue. In that context, I would very much like to say one particular thing as a very, very significant observation. That is, let's understand and appreciate one point, that India's central bank, the Reserve Bank of India, probably is one of the very few central banks the world over which has been talking about and thinking about and acting on financial inclusion much before the whole world started talking about it in an animated and in an active way. And there I will link up a few things that RBI has done, which of course includes setting up of the College of Agricultural Banking in 1969. In fact, I would suggest that the important milestones which have been mentioned here, there in 1969, probably we would usefully also mention that, because that institution was set up in 1969 as a college for cooperative banking. And imagine at that point in time, RBI was thinking and talking in terms of including people into the bank, bringing people into the banking system through capacity development initiatives. That was later on converted into College of Agricultural Banking, where bankers were trained and skills were imparted for agri-lending in small ways, crop loans and varieties of such things. And then if you go back to the area of regulatory initiatives, which were both in the nature of prodding the banks and also kind of giving them some kind of direction, the priority sector lending guidelines of RBI, they were actually fundamentally in the nature of financial inclusion drive, which at that point in time was articulated not in that language. People actually have started talking about financial inclusion post-financial crisis in such a big way. We hear so much of noise, but very silently the central bank of this country has been working very assiduously on this agenda. And then if you look at the lead bank scheme, then the service area approach in licensing matters, where you find a very wonderful fusion, alloy of regulation and developmental thrust of central banking, and a very wonderfully crafted way done. And there I position the creation and setting up of the College of Agricultural Banking, where they started talking about and giving training to the bankers, especially the cooperative banking sector, as to how to lend. And obviously these things were lending to the small borrowers, small people, and in consequence they would have meant, and they actually meant, that people were brought into the financial system who would have remained outside. Similarly, when the agricultural banking training was done, that also fulfilled that purpose or met that purpose. And down the line today, we also do a lot of work on MSME lending at the moment. Let me add one more layer to what I have been referring to as RBI's initiative. Recently, in August, our Deputy Governor, Mr. Mundra, he came down all the way to Pune, and he took all the pains to be there present, and he launched a mission which we call in RBI as NAMCAPS, National Mission on Capacity Building for lending to, for the bankers, for lending to MSME sectors. And in CAB Pune, we have developed, designed and delivered also a syllabus and a course content, which will go a long way in standardizing some type of skill building exercise across the banking system, where we are not talking so much about the skill, but we're talking about the aptitude and not even attitude. We are now working in CAB Pune quite a bit in a very aggressive way on building certain technical part of it, which would help us identifying the aptitude amongst the bankers.
Any focus program for financial inclusion which CAB is driving and which you would like to showcase as a success?
Yes, we are doing this one I'm mentioning specifically because here what we are trying to do is we are trying to talk more about the soft skills amongst the banks and bankers, about how they should look at the prospective borrowers and how they have to design their products and processes which would really not, be so much cognizant about the standard constraints which we talk about while financing the MSME borrowers?
Thank you, Panda. I think I'll take up. I think Bangladesh, as an example, we are hearing from Professor Muhammad Yunus time, where to be very frank, it's a culmination of microfinance, financial inclusion, and recently we had governor of Bangladesh Reserve Bank with us, Central Bank with us, and I had a lot of learning from him on how the technology is being really extensively used for the promotion of inclusion. So one, Professor Hassan, I would like to understand from you, because you are a capacity building institution, as I understand, from Bangladesh. How exactly you are supporting both the sides, demand as well as the supply? Because it is established fact that unless the demand side is created in a right perspective, the objective is not achieved. So I would like to have your little views on the demand side, how exactly the demand side was created in Bangladesh, so that people have started using this facility. But the usage of the facilities in Bangladesh probably is much more in percentage terms.
Okay, thank you, sir. Before talking specifically on our demand side issues, a bit about overall perspective on our financial inclusion strategies. We all know that we basically talk about, whenever we talk about financial inclusion, it is about maybe deposit services, finance services, or mainly payment services. And if you carefully observe, we are very encouraged, inspired with these two services, deposit and payment. But what about financing services? It is almost stagnant, whether it is Bangladesh, India, anywhere. So I'll come back to that whenever I'll be talking about the demand side. About our financial inclusion strategies, one basic strength is our current governor is personally interested to take it forward. He's taking interest personally. He's observing each and every step. He's even supervising personally. The weakness is that whenever he will not be there, we must have somebody to take that forward. So that is a weakness of our financial inclusion strategies. Now, yes, positive changes has taken place in several fronts, and we are using technologies. We have introduced green banking in Bangladesh. About demand side, yes, technologies has helped a lot, especially in payment front. bKash, some of you may have heard about the product of one subsidiary of BRAC Bank, and that is a payment transfer technique from one place to another. And in a country like Bangladesh, throughout the country, now we have, I think, more than 4 lakh bKash agents operating everywhere at different corners of Bangladesh. Now, what you will have to do is, you have to go to the agent, you have to open the account simply. Then there is procedure of cash in and cash out. Anywhere you may transfer fund immediately from your mobile. And now we have got more than, I think, 110 million of mobile subscribers. So that is the positive strength. And yes, central bank and some other banking associations, they have played role in financial literacy also, in awareness development. Because even to the rural people where education, literacy rate is low, it is not easy to, for them to use all those product comfortably. So yes, in the area of financial literacy also, central bank is contributing. Moreover, we are considering technology as part of our green banking initiative. Because whenever we are saying green banking, that means nobody is excluded. Nobody is excluded. Everybody is included. So in that sense, that is also part of, green banking is part of, inclusion strategy of central bank. And as sir, you are asking, what is our contribution? We are really proud to say that the current green banking policy framework that is followed by the Bangladesh Bank and all the banking sector that is prepared and formulated at BIBM campus. We have prepared it with the consultation of banking community, and now it is circulated to the banking community, and they are following it since 2011. And from the observation, we can say that the outcome is really, really good. And about technology and green banking, normally we say that, online banking, any kind of online banking is the starting point of green banking, because you are saving resources, you are saving time. And this is the core at the center of green banking activities in the context of Bangladesh.
Well, I would like to take your discussion further with you only. The model which is in place in Bangladesh, is it driven through MFI or the business correspondent model? Who are the representatives of the banks?
It could be it could be even MFIs, or nowadays agents are even small retailers, even every retail shop.
Okay.
And MFI could be there.
Agent of banks.
Bank, yeah, obviously.
Okay,
This is
fine.
bank-led model.
So I come back to this issue. I think the numbers are very clear to suggest that a lot is to be done in the Asia Pacific countries to improve the inclusion.
Absolutely.
And when we talk of inclusion, I am very sure that we all in this hall are clear that we are looking beyond accessibility.
Yes.
I think the accessibility is by and large achieved in most of the countries where the banking accounts are open. But then going beyond banking accounts to meet their credit needs, to meet their insurance needs, to meet their pension needs, how exactly these activities are being driven?
Actually, sir, what I feel is, what is the basic difficulty you see? I always think interest rate is not a problem at all. It is about the processing time, documentation, formalities. Because if you ask me, what is the percent of people that have access to credit in Bangladesh? I may say more than 90% even. But a huge section of people is taking money from the informal money lenders, from the clubs. Why? Because you are asking, you need money now, you can get within 10 minutes. If you go to bank, MFIs, they have got processing period.
I think that's a great point on which NABARD is really working for years how to get the people out of the money lenders. And I think again I come back to the same point with Daveji, that ultimately we all know that the brick and mortar branches of the banking industry cannot meet the requirements of the financial inclusion. And thus the linkage which is available is the business correspondent agent. What model should be the right model to see that these business correspondent agents, they deliver what is really desired of them as a representative of a bank?
Well, I see the gamut of issues in the BC and viability of issues. I'll try to put together both the things.
Yeah.
Couple of anecdotes first. See, when the Reserve Bank of India initially said that who can be the business correspondent, a set of guidelines were rolled out that these are the people who can be looked at. While banks went about appointing the business correspondents, whether it was a corporate BCs or individual BCs which are appointed, somewhere down the line, the emphasis was to pick up somebody who is outside the system. When I say outside the system, a kirana shop or a medical shop or a petrol pump, they were not part of the delivery system of the financial services. So we picked up them and said that tomorrow you become my business correspondent. But we missed out on some people. We missed out on milk cooperatives. We missed out on the 100,000 cooperative societies. We missed out on, let's say, 7.7 million self-help groups. I'm forgetting that, only 4.4 million SHGs are the, which have been already extended the credit. They were there every village. But we did not have time because we had our targets, we had our anxieties, we had our systemic issues as to who will go and identify which is a good self-help group, who can be a good. See, these people were already part of the financial architecture. Had we looked at them, some of good working self-help group who's your customer for 5 years, The lady, the coordinator of that group, she knows what is saving, she knows what is credit, and what are the issues involved in this. Possibly we could have looked at it. This is one part of it. The initiatives that we took in Uttar Pradesh with some of the RRBs and in Madhya Pradesh, where SHG women were appointed as BCs, they did fantastically well. The second point, the viability of BC. We are talking about making BCs viable. When I was heading Gujarat office, and when I realized that in my entire tribal area, and some of my colleagues who were there in SBI, they are also present here, we were not physically present. Where were the bank branches? Even today, I mean, Gujarat tribal belt is such a situation. You can imagine the situation of other tribal areas. We are not physically present. Now, if you look at, the viability of BC in a tribal village is going to be an issue. Where is the intervention required? Not in Ahmedabad, Baroda, Surat. That's not the place where you really need to. That's a separate issue. Viability is an issue in difficult areas. What we said that would the banks like to use this network of BCs in promotion of joint liability groups? Would you like to encourage? We can train these BCs. CAB can train, IIBF can train, NIBM can also chip in, BIRD can chip in. Training of BCs into beyond what he's supposed to do. And he gets a business for you for a fee. We offered.
I would like to take the point of viability further. I think when we talk of a viability, one is that for a person to continue as a business correspondent agent, he must get compensated sufficiently so that he adopts this as a livelihood. If he is not an employed person, he accepts this as an employment. And he should be able to make a livelihood. To meet that kind of a requirement, he should be supporting the banks to earn that much of a profit from a client relationship. Unless this equation is established, how do we really drive the viability? Would you like to throw any light on this?
Since these were the pilots, we said NABARD will fund the cost of promotion of JLGs through BCs in the tribal areas. What some of the banks did, SBI, Bank of Baroda, Dena Bank, what they did, they kept aside 50% for incentivizing the branch because they are doing extra work. 50% of this money was passed on to the BC. So let's say in a village where I work as a BC, if I am able to promote 10 JLGs, I get 10,000 rupees in a year. Now, even normal BC operations will not fetch him that kind of volume in difficult area. So the challenge is, we'll have to find what is the add-on that we can give to the BC. How do we build in a viability model, a commercial model, which enables the bank to generate and also.
I mean, ever since I'm in the space of financial inclusion, as he rightly said, even the private sector lending was the same. But we have been saying about the financial inclusion being viable. But the challenges of viability are still persisting. I am very sure you ask any banker to do his study on viability, I think they still find that had government supported this much. I think Professor Hassan, Dr. Hassan has said about the ownership, that ownership of the government and the central bank is flowing. I think there is no lack of ownership in India also on that count. But on count of financial support, I think probably I would like to understand if Bangladesh is doing something different to see that the banks are comfortable in adopting this model, which is viable.
Okay. Yes, I mean, there are several refinancing facilities and there are interest subsidies are there. And if you ask me, are all banks motivated to perform all these jobs? No, not all, not at all. Mm-hmm. Maybe a few. Okay. They are motivated. But now sometimes.
So how do you motivate them?
Yeah, sometimes it's a kind of pressure, I can say. Okay. I should say, from the central bank. And second thing is, you have to, like we have got provision that each and every bank's loan portfolio, I mean 2% of total loan folio must be distributed to the agriculture sector, farm sector, is must. So this is a kind of compulsion on the part of the central bank. But yes, at the same time, central bank is offering refinancing facilities, and interest subsidies are also provided from the government side. So it is there. So there is no doubt that in a kind of market like Bangladesh, we don't have any market incentive. But definitely you need regulatory incentive.
Okay. Pataji, ever since the financial inclusion as a concept was introduced by Reserve Bank of India in 2005-06, if I'm not wrong, we are talking about the poor being bankable and the financial inclusion being viable. And I am very sure as a regulator, there have always been a concern that no, it should be viable. Now, what is your view that how can we really make it viable commercially and not through the gap funding? One is the gap funding itself is not happening adequately because probably there is a gap in understanding itself what is the gap. But then how exactly it can be made commercially viable?
Well, this is a very interesting issue, and actually this is the core issue. This is the crux of the matter. One of the reasons why the financial inclusion really doesn't succeed is that both from the business side and from the regulatory side, if the regulator is interested, we do not have a hand on what exactly is happening in terms of the economics. Whether all that we are talking about in terms of, say, the BCs not being viable, or the banks telling that, we can't part with more than what we are parting with, and all that stuff. This is happening because of two things. One is, I would quickly refer to the document, Dr. Raghuram Rajan's comment in that document where there was a talk about the 100 small steps. That essentially looked at the whole issue from a totally different paradigm. That is, it talked about the financial inclusion and inclusive finance for the first time from the point of view of competition. What it wanted to say was, and it's now getting translated by kind of unbundling of the banking as a process, is unleashing the animal spirit of competition and to see whether that is driving it on its own without being prodded by any regulatory design or a lot of academic discussions only. If the people compete, they will probably succeed in competing away the poor economics involved in financial inclusion. And probably the other thing that is involved, as he was mentioning, the most important part of it, which needs to be very solidly looked at, is whether we need to develop typical capacity, typical orientation for doing financial inclusion operations. I think it's not the thing everybody can do.
Before I take the session to the audience on question answer, one more question to you. The regulator has recently given the license for 11 payment banks, 10 small banks. For MSME sector, where we feel that a lot of exclusion is there, particularly on the micro side, we have come out with the Mudra scheme, which is again for funding to the micro entrepreneurs. Now, how do you feel that these things will really deepen the financial inclusion in the country?
Well, yes. If we look at the statistics and data, I would not be able to exactly quote it, but we all know that quite a very, very significant percentage of the MSME, they stand excluded, be it micro, be it medium, small, and whatever. We in CAB call it the first M as the missing M in the MSME drive. Mostly we don't put emphasis on that, but whatever it is, they are left out in quite a big way. What we have seen and what we have witnessed over a period of time is that despite all the efforts, the things have actually not happened. So perhaps one of the reasons that one can think of is that there is a fundamental structural issue in a banking organization which is large, mandated, and kind of not driven by competition in the substantive sense, which would not see merit in MSME lending, where people have gone to any length to analyze and come to a conclusion that there is a lot of money lying there, a lot of wealth to be unlocked. But it's very intriguing to find that still, when it comes to banking getting operated on the ground, it doesn't get translated into delivery of credit to them. So there's a big mismatch between what economically sounds very intuitive, and also it can be backed by solid research, and what happens on the ground by way of actual delivery. This mismatching is probably attributable to the fact that people have not tested out really. So once you test out through these institutions, and once it's established that there's a lot of money to be made, I think there would be big rush. And then there could be a lot of fallout which we may not anticipate at this point in time.